The new trading week opens with a sense of anticipation. Opendoor stock finished Friday at $7.16 per share, a small gain that, on paper, doesn't look like much. But the real story isn't the few cents up or down, it's that the stock continues to hold steady. Despite all the volatility across broader markets, despite every bearish headline calling it a meme stock or a flawed model, Opendoor has kept its footing. And now, as we head into the week of October 21st, the company sits at a true crossroads, technically, psychologically, and narratively. This is the start of what we've been calling the three-catalyst window, a critical 3-week stretch that could reshape how investors think about Opendoor heading into the end of the year. It begins now, with the upcoming release of new U.S. housing data on Thursday, continues with the Federal Reserve's rate decision the following week, and then culminates with Opendoor's own open house earnings call on November 6th. Every one of those moments has the potential to move the needle. And what makes this week especially interesting is that it's the first real external test of the company's new era under Nejatian and Keith Rabois. Up to now, most of the story has been internal: new hires, cost-cutting, the rollout of AI tools like Ernie and Chloe, and the shift toward a leaner, more efficient hybrid business model. But this week is where the outside world starts to react. The tone across markets has been cautious. Last week ended with a mix of green and red sessions, but the underlying sentiment is still defined by uncertainty. Inflation data that looked slightly better than expected, Fed officials hinting at patience, and mortgage rates that finally dipped closer to 6.25%. That's the lowest they've been in months, and that detail matters because it directly feeds into Opendoor's world. Every time mortgage rates fall, even a little, you unlock new liquidity. Buyers who were on the sidelines start browsing again. Sellers who were holding out suddenly realize they have options. And Opendoor, whose entire model is built around liquidity and convenience, thrives on that renewed movement. So the first question heading into Monday's pre-market is simple. Does the market recognize that shift? Will traders and investors begin to position ahead of Tuesday's housing report, anticipating that the thaw in housing activity might finally be real? Because while the macro environment sets the stage, the narrative energy around Opendoor has been quietly building in another way, through community conviction. Eric Jackson's Drake campaign has now reached day 63. 63 consecutive days of videos, charts, posts, and insights focused entirely on this stock. When he started the campaign, it looked like a small social media movement. Now, it's become something bigger, a rallying point for long-term holders and a reminder that conviction isn't built on noise, it's built on persistence. Jackson's symbolic target has been 82 days, mirroring the way a musical artist might climb the charts through consistency rather than luck. And we're now just under 3 weeks away from that milestone, roughly the same timeline as the three catalysts. That alignment gives the story an almost cinematic rhythm, 60+ days of daily conviction leading right into the earnings call that could validate the thesis. But what's even more striking is the tone of Jackson's recent commentary. He's moved from defensive to quietly confident. In a Business Insider piece over the weekend, he talked about the U.S. housing market showing early signs of revival and pointed out that Opendoor's positioning is stronger than most people realize. He's not predicting fireworks, just a gradual return of life to a market that many had written off. And that sentiment fits perfectly with what we're seeing in the charts: low volume, tight trading ranges, and a stock that refuses to break down. When trading volume dries up, as it has recently, it's often interpreted as apathy. But seasoned investors know that low volume near a major support zone usually means something else. It means the speculative money has moved out and the base is solidifying. Buyers are patient, not absent. The same thing happened with Palantir before its AI rally, with Carvana before its comeback, and even with Tesla in multiple phases of its history. The market stops caring, right before it starts caring again. The other piece of the puzzle this week is valuation. According to Zacks Equity Research, Opendoor is still trading at roughly 1.2 times forward sales, far below the multiples of most companies in its sector. That's the kind of pricing you typically see in distressed or forgotten names, not in companies with growing adoption, real technology, and brand visibility. The Wall Street Journal and Barron's can call it hype if they want, but the truth is that the company is being valued as though it has no future, even while it's quietly proving otherwise. And that's where this upcoming catalyst stretch could change everything. If Tuesday's housing data comes in strong, it won't just be a macro win, it'll be a signal that liquidity is creeping back into the market. That matters because Opendoor's biggest limitation isn't demand for its product, it's supply of transactions. The company makes its money when people are active, when they're moving homes, and when the system is fluid. A pickup in transaction volume directly translates into higher gross profit per home sold and better margins. If the Fed then reinforces that message by taking a softer tone on October 29th, the domino effect begins. Mortgage applications rise, affordability improves, sentiment shifts. It doesn't have to be a massive change, it just has to be consistent. And by the time we get to the earnings call on November 6th, Nejatian will finally have the stage to tell the story from the inside. This will be the first time he's able to connect the dots publicly, to show investors what's been happening behind the curtain since he took over. The AI integration, the efficiency drive, the management reshuffle, the cost savings, and the focus on scalability. What investors will be listening for on that call isn't hype, it's clarity. They want to know if the company has stabilized its unit economics, if margins are improving, and if the technology stack is delivering measurable efficiency. If CAS can show even modest progress on those fronts, it could begin to shift institutional sentiment. And that's where the real leverage lies. Retail investors like Jackson and the online community have already built the emotional foundation. What comes next is where the big money starts to agree, where the hedge funds and larger institutions begin to see Opendoor not as a meme, but as an underpriced growth platform sitting on the edge of a cyclical recovery. The technical picture supports that view. The $7 line remains the foundation. Each time the stock has tested it, it's bounced. There's clear resistance around $8.50, but that's a small gap in the grand scheme. If housing data beats expectations or if sentiment turns, that gap could close fast. It's not unreasonable to imagine a test of the $9 zone within weeks if the catalysts align. But just as importantly, this week is a tone check. If the stock holds steady through the early sessions and volume starts to climb slightly into Tuesday, that's confirmation that smart money is watching the same setup. It's not about predicting the exact number, it's about reading the rhythm. Another thing worth noting is the change in corporate language lately. Even without new announcements, the tone of Opendoor's public posts has shifted from defensive to forward-leaning. CAS's recent updates on AI procurement, cost savings, and leadership additions all point to a company that's embracing operational discipline. They're not chasing hype, they're building systems. And that's exactly the kind of foundation that allows a stock to eventually re-rate higher. From a psychological standpoint, this is one of those inflection points that tests patience. The bears have had their run, multiple skeptical pieces, a valuation discount, and a market that's given them every opportunity to be proven right. Yet the stock hasn't broken down. The bulls, on the other hand, have stayed quiet, focused, and grounded. That's usually the side you want to be on as the catalysts begin to roll in. So as we head into Monday's pre-market, here's the key perspective. This isn't the week to overreact to small moves, it's the week to watch the build-up. Look for subtle shifts in pre-market volume, how the stock behaves near the open, and where the broader market sentiment improves on Monday morning. The story is bigger than a single day's action. It's about positioning for what's coming. If the housing data on Tuesday delivers even a modest positive surprise, it will be the first real validation of this setup, and from there, the focus shifts to the Fed and earnings. 3 weeks, 3 shots at rewriting the story. And that's why the title of this video, Open at the Crossroads, fits perfectly. Because right now, the company sits between skepticism and recognition, between quiet accumulation and potential momentum. The next few sessions could determine which path it takes. The takeaway heading into Monday is simple. The lack of news isn't the absence of progress, it's the build-up before reaction. This is the quiet moment when belief either solidifies or fades. And if history is any guide, conviction built during the quiet weeks is often what pays off when the storm finally hits. So stay patient, stay observant, and remember, the first catalyst is now just days away. Opendoor's story is about to move from silence to signal.